Good morning, guys. Welcome to this Friday, May 23rd. And we got some halabaloo going on in the markets, don't we? That's a technical term if you didn't know. So it all stems from a couple of Truth Social posts. Not Trump posted he wasn't happy with Apple manufacturing in India instead of China, and they may have to pay a 25% tariff. And the other bigger one was the European Union. He said they were difficult to deal with, and so he's going to slap a 50% tariff, straight tariff on them on June 1st, and the market is fell out of bed. Is what happened with that one. So that great. Okay, so then now we have a massive turmoil here going into the start of the day. So there you go. That's what's happening in that in the more in these two big sell-offs we are looking at. This is pre-market panic is what I would call it. It's we'll see what happens when the day session kicks in. But the initial reaction is, of course, hit the sell button, get out, panic. You know how it goes. News this morning. Nothing until 10. We have new home sales number come out at 10. We have a Fed speaker at noon, and that's about it. So not much news to drive the market. These two have through social posts and pieces of news which came out. They're definitely going to be driving the news cycle for today's trading. That's for sure. Now, today on Monday is Memorial Day. It's a half a trading day, so I'm not going to open the room. So the market reopens Sunday as usual, and then we have a half day early close at noon Eastern, and that's kind of what happened there. Yeah, Google it. That's right, man. Hullabaloo. Yeah. It's a technique. I mean, that's the best way of putting it. I mean, the market is absolutely reacting like, with that's absolutely falling out of bed, you know. So it's not much news to drive the market on the news calendar. This 50% tariff on European goods across the board is obviously a pretty overt threat to the European Union. Start negotiating, stop playing games, and we may get something done. But obviously they are playing games, and this is what happens, you know. So I guess they'll figure it out soon that the guy is not joking, and it's they can't. They're gonna have to make some changes. Either way, markets at this point kind of blew the whole analysis out of the water. We're starting off from the short side at this point to see how far they can take it. That's pretty much where we are at. So at this point, we are right heading down to this 57.50s. We just blew through all these support areas we were holding up against. And that is exactly, I mean, that's just typical market development. You have a piece of news, could be unexpected, could be expected, but not the kind of news you expect. Or it could be like a planned but not expected outcome. No matter what it is, when the market gets surprised, the reaction blows everything out of the water. Now we have a move out of the middle to the downside developing. And so we'll trade it as such, start from the short side of the market. But I would stay on the sidelines a bit. The short side is pretty freaking volatile right now. So I mean, if you would try to get on a short trade with the size of the bars we have right now, you can easily get just freaking run over. So I would be cautious until I see. I mean, if you want to get short, you have to kind of get short on the pullback and hope you're not in part of a little snapback rally, you know, because you're going to get those as well. But the initial reaction right now is flat out negative, and we are running right down here towards this lower attractor. We're probably going to see a test of that 5,700 level here in today's trading. Would not be surprising at all. And how far they can take it, this could be like one of these days which just runs it all the way back down to the 5,500s. It's one, oh, sorry, 5,600 is probably the first one they're going to stall at. But a day like this, you can just get this pile-on effect to the downside. And it's anyone's guess really what's going to be on the table for how far they're going to take it. So if this is a pre-market overreaction, we'll probably see it snap back here pretty quick back to the mean and back up again. But if it's not, if the market really leans in on that short side, they're going to start seeing them start taking out more support areas and start heading lower. And it's 10 of us guess at that point. We have support areas on the F2, but they are haven't been tested for a while. So we'll see how strong they are, but they're still there from the prior move to the upside. Now, getting short, you would have to get short on something like this, right? And when it starts trading higher and you get closer to an upper potential edge, that you kind of get short, see if you can get your stop on the right side of it. That's the only way you can kind of trade it. And obviously, you want to try to get if you're thinking about taking a trade like that, because it's pretty aggressive, because they can really snap it back and run it down, and run the stops above it. It's anyone's guess how strong the moves are, but these are pretty big bars. I mean, this bar here is 840 to it's like 60 points. So just these bars here, these are on the way down here, 80 to 67. So this is like 15 point bars. So these are huge bars. So you want to be really cautious trying to trade that. I would just probably stay on the sidelines until I see it calm down a little bit. See what kind of direction. If you're going to start seeing a grind to the downside, like a steady selling pressure, you'll see some continuation in the day session, and that's going to give you the sign, okay, trade it a little bit more aggressively from the short side and see how far they're going to try to take it. And if they start snapping back, okay, then it kind of puts us back in more of a range bound spot. But you kind of have to wait to see how far they can snap this back. If they can get up above this area, the 58.35s, yeah, then we can start thinking about range bound trading again. But at this point, I would just start off flat out on the short side, looking for spots to get short for rotations back down, and then let's see how far they can take it. So great job, Mr. President, lighting the markets on fire in the morning. Exactly what we need going into a long weekend. All right. Looking at the bonds and the so I mean it's at the so I didn't notice I didn't call out any levels because the levels we have right now is like pretty much they just ran through all the support areas all the way down to the 57.60. So technically you're looking for short setups against, well, here you have a ledge right now forming a little bit here at the 57.80s. If they retrace back up, you have potential of short setups against 5800 and 58.15s. As I said, once they run through them like this, they kind of lose some of their power. So we just kind of, I would be focusing more on the F4 intraday stuff, and then keep the levels as more of a guidance at this point. Because this is, see here, now just kind of leaning into it on the short side. So if you got short on that pullback here, I mean, you've been in a good spot right now, but watch this now snap back. So it's a lot of volatility back and forth. So just trade it with a lot of caution if you want to engage this. Personally, I'm probably not going to engage it at all until I see it come down and you see some semblance of of a structure developing here. Bond market way back up again, popping to the upside on this. So yields coming down, bonds heading higher. We are right back up again off the lows. So that's interesting. Sometimes you're gonna have to ask yourself if there's some method to that madness and so coming out to these things, and if it's some thought behind it. But it's at this point the yields are coming down. Yields were kind of on a free fall on the downside. Not the prices were heading lower in a pretty good clip on the bond market, and this just raised the rate or dropped the rates, raised the prices on the bonds and dropped the rates pretty hard. So I mean that would be a positive effect of an announcement like this. Even if the market is having a massive case of heartburn. So I would start off on the long side on the bonds at this point, doing the buy weakness. We're a little bit better to lean against here at this point against the 1205s, 12s, down to the 11, 28, 6 to 28. Below 26, 28s, back on the short side on the bonds. So we'll see if how this reaction is. right now we are in the reaction. We are in the response to a piece of news. So you just have to wait for it to settle in and see how the market digests the information. And remember, same on the Nasdaq. You see this runs down. Initial reaction, hit the sell button, pain, panic, 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 and then pile on, pile on, pile on, pile on. At one point, they're going to run out of gas, and then you're going to see some sort of a snapback rally, and that's going to tell you if we are going to stay in more of a range, volatile range, heading back towards that mean, or if we're going to see like a continuous grind to the downside here until the market really, and as people just kind of liquidates everything and one going into the weekend. All right, so Nasdaq also just took a big dump. And hey, they took out support. It's by the 21 200s. It blew through that one, blew through the 100, everything. We're heading right down here to that support area. It's 27, 730 to 800. Remember that area? We talked about that. That's where they'll find support again if they start retracing these single prints. Little did I know that it's going to do it in like 5 minutes, right? In a 5 minute rundown. Boom. That's a little bit more than 5 minutes, but they're pretty quick, pretty freaking quick. That's how fast it goes when the some piece of news comes out like that. I hope you weren't in a long trade and you were without the stop. Then you would have been finding yourself in a really bad spot. So both the ES and Nasdaq, I think it can run out all the way down to test those gap ups we had not too long ago. So Nasdaq probably can run all the way down here to that 2300s pretty easily. So we'll see how far they can take it. So if that grind starts and they start taking out on the Nasdaq, you have a pretty good area there on the 730 to 800s. If that comes out, just look for that grinding move to the downside. That's more aggressively, just kind of get on the shorts at that point. On the ES, I'll get back to that in a bit where that gap is, but it's the same story there. So I'm just waiting for that. This initial reaction right now looks like they're stalling a bit. Okay, so that's a good sign. So that initial reaction may be over, looking for that little pullback. And then let's see if that pullback turns into just further selling. That's what I'm going to count on. But it's if it doesn't, then the market may um, the general market may take this with a grain of salt and kind of discount this whole move. So I'll trade oil, ES and Nasdaq on the short side, bonds on the long side, oil and gold. And again, I didn't call out any level. You probably had to look at the F4 today for levels. When it's volatile like this, they just kind of blow through stuff pretty easily. These big F1 levels are the ones to pay attention to really when it's moving like this. On gold, to the upside, popping to the upside, flight to safety, back on there again. So capital flow on gold. Capital flow on gold. So we're back up here, and at this point, look at that upper edge. Here you have a volume edge on gold, 3350. That they take that out. Well, we're heading up here towards this upper area again. That's your big volume edge. If that comes out, I would say that they just stay on the long side on gold if they take that out. So on F1, you get a pretty good perspective on the long term, and you see these big levels, and that's the ones which the market's going to run to when you have these big reactions in the market. So big reactions, the F2 levels, yes, they just blow through them. They're not strong enough, but the bigger ledges like this and bigger areas, it's a lot of volume, a lot of activity, could certainly stall moves like this, big violent moves. All right. So trade gold from the long side, watch that upper edge if it comes out. If it doesn't come out, they start retracing back to the 3340s. Just go back range bound on that one. And then on oil, a reaction, but not crazy. I don't think this is necessarily an oil type reaction, but it was a small reaction on oil. Anyone's guess, but they're trading right in that range still. So I would say oil is just trade oil as a range band market at this point. You have you can see where you just trading in this range again. So they're back down here trading in this range, and I will just stay range bound on it at this point. I don't think oil is the one that's going to really be moving today a whole lot. It's probably going to be back and forth a bit. So range bound oil at this point, fade the edges. You can probably lean on edges on oil. So on that guy, you have the 61s, the 6130s, the 6170s for short setups. Look to buy against support at the 6030s, 5990 to 60s, 5960s for rotations back up. So those are 3 levels up, 3 levels down on oil. I would say below 59.90 may stay on the short side, and if they start trading above the 61.70, stay on the long side. I mean, may have some sort of a directional move going on at that point, but starting off range bound on oil. So if you're looking at something to trade, range bound oil probably a tradable. Gold is probably tradable still, not in an absolute nutty move, but I would just watch that upper volume range. I could set up a nice short for rotation back down. And then back to the ES. And as I said on the NASDAQ, the NASDAQ gap was down at the 2300s. The ES gap is down here at the 5700s. Well, it was at 57.15. They gapped up to the 57.30. So in this general range. So this is they start taking this out, or you'll probably find some support in this area, but um, they start taking that gap out and retracing. Yeah, well, bets are off at that point. So we'll see how weak this is going to get, but I would stay on the short side still. And if the gap comes out and it starts trading below it, just stay on the short side. And this gap could potentially provide you support enough to stall the market and maybe turn this big flat out sell-off, turn the tide or at least stall it. All right, so we'll see. Here's the Nasdaq. We'll watch them. The bond market was up, now it's down. Let's see how this whole thing gets digested by the market. But what a way to start off Friday, right? So my recommendation this morning would be to sit back a bit and watch it and see if you can figure out the what kind of side you want to trade this on. I'm going to start from the short side until I see some signs that there is a retracement going on. Otherwise, if they start retracing it, I would be looking for short setups, but not aggressively. Because I mean, if they start retracing this against the tablet, yeah, against this upper area next tab it up, yes, but they can technically retrace it right back up to that mean and then just head right back down again. And sometimes you get, if you're aggressively trying to short it, I would be either aggressive and then let it stop me out quickly, or if it starts running, I would be a lot less aggressive if it starts running to the upside, trying to get on that thing unless I get to the mean or something like that. So that's the best recommendation I can get on this one this morning. And let's see how this whole thing shakes out. It's going to be one wild morning, that's for sure. Alrighty, guys. I'll wrap it there. Good trading, and I will see you back at 11:30 for the next update. All right, guys. Later.